Good evening. Welcome to the ShadowTrader video weekly for Sunday, March 30th, 2008. I would characterize this week's action as slightly disappointing so far. However, as I'm about to point out, I think we're just building out the right shoulder of the inverted head and shoulders pattern that's been forming over the last couple of weeks in the S&P and in the major averages. In the 20-minute long video last week, we took quite a bullish stance, and earlier in the week you can see that worked out really well. If you look at an S&P on a daily, go back 5 days here, 1, 2, 3, 4, 5, right? We took a really bullish stance at the end of last week in the video and said, look, this market is pretty much poised to go higher. We were right for the first 2 days. We did have a good increase upward, and what I thought was interesting about the thrust last week is notice that we finally cleared the swing highs here, right? Look at the swing high here from, what date was this? This is early in March 2008. Let me get my date up. Hold on one second. We crossed right here, which was March 5th. And then in this point here, which was March 19th, right? Notice these swing highs in the S&P right here, which is the 1344 level, and then again 1333 level, right? Well, the thrust that moved us up in the beginning of the week was able to close daily candles above this range, which to me is still bullish. Now, granted, the problem here is that the pullback over the last 3 days has been a little bit steeper than you'd expect, because I was thinking that, bears would be forced to cover here, but this could be forming the right shoulder of the inverted head and shoulders, and at some point you have to just kind of trust it. I mean, we did have big body weekly hammers. If you look on weeklies on the financials, for instance, XBD, which granted hasn't followed through yet. We did move over the hammer, but we haven't violated. So until we see a violation here of this bottom area, let's say on the financials, that'll be a good place to look, right? We could put this right here. We got to figure that this is still going to work out, that we're still just forming the right shoulder, and that we're not in a situation where the market is like quote-unquote doomed and say, oh, it's never going to go up. And to be honest with you, if this right shoulder here on the S&P continues to form in a choppy manner, remember, for the bulls, this is even better, because this is going to create the situation of the quote-unquote throwing in the towel, where psychologically the majority of the market participants who are generally long anyway are going to give up and say, oh, it's never going to go up. We're just going to stay in these doldrums. We're going to constantly chop, and they'll be short at the wrong time. They won't be long, and then when we do see some sort of move up, which should happen in the month of April, they'll be buying shares late to the party, basically, right? They'll be the late to the party Charlies. Remember, we've discussed this before, that the general modus operandi of the market is simply to make the move before the retail money knows, right? The way the market works is that it wants to keep retail money out of it, basically. So that's what I think is happening. I think that the market is just constantly teasing us at forming this right shoulder. Obviously, if we see aggressive violations by the bears down below the, to the prior swing lows, or obviously if we go below it, then it's all over. So that's pretty much the situation. Let's take a quick look at the core sector list on weeklies so we can get a grip on exactly what's going on currently. We did see some nice moves up in oil services over the course of the week, which had nice bullish reversal, right? Kind of an engulfment here, or at the very least candles lining up same size bodies. There could be some perking up in oil services, so we'll want to be possibly taking a look at Halliburton, Schlumberger, BHI, etc. in the coming weeks. The internet index also with the bottoming tail hammer. What I want you to note as I go through these weeklies is simply just look at the bottoming tail hammers of last week and then see how the index acted if it went up and over the top of last week, and then if it failed or fell down, right? So the internet's kind of moved up, but again, I'm the first one to admit this isn't really strongly bullish action. I'm still bullish here, thinking that we should be putting in a bottom, building out the shoulder, but I would have liked to have seen more, obviously, rather than just a Monday, Tuesday move and then, no follow through whatsoever after that. Oils, not too impressive, right? We never moved over the prior week's high. Software moved over the prior week's high only a little bit and then completely failed, right? Pharmaceuticals, nothing, basically making a doji. They barely moved. That's pharmaceutical again. Sorry, I got something screwed up here. Healthcare, nothing, just open over. Transports are important, right? And I like this move up over these prior swing highs, but again, same thing. Was not able to form a big body candle to the upside, right? Insurance, again, moved up and over and fell. Home builders, same thing, but did not clear the swing high here on the builders. Utilities, some sort of a weirdness here. I don't know if my chart is wrong here. I'm going to assume my chart is wrong on the gap up. But regardless, forget about where it opened. You can look at where it closed, right? That's what really matters. Semis still languishing. I mean, I don't know when this sector is going to wake up, but again, no movement over the swing high. But that's really okay because this sector stopped leading a long time ago, and I'm no longer a believer that it has to really spark a rally. Mining stocks we're out of. I don't think they're ready to do anything yet. I would wait to see if gold puts in a stronger base here at the 900 level, right? We actually sold gold at the top at 98. 980 an ounce, which was great. We played this move from 800, which worked out really well for us. And for now, we're just pretty much neutral on the metal. I don't see anything there, until we build a bigger base here. Biotech's had a beautiful double hammer formation off last week and did move up well, which is bullish, I think, for the NASDAQ. This was good. See, this was the type of action like in the biotechs that I would have wanted to see in the whole market. If you take a look at this biotech index with the double hammer on the weekly, which is an extremely powerful pattern. Notice the 200 MA at the bottom, 665. That's what I would have wanted to see in, for instance, this one. Banking, right? Come on, where's the financials? XBD, broker-dealer, again, where's the financials? Remember, 23% of the entire S&P is in these financials. So we need to see this sector perk up to get things going. So far, like I said, we had a slight move over last week's high. We haven't violated the shadow of the hammer underneath. But again, I'm still, cautiously bullish. But once again, to reiterate, I'd like to see more. So let's see what April gives us. One last thing I will leave you with is check out the monthlies. This was the pattern I talked about last week in the long video about the hammer. It's kind of a hammer, right? I would rather that we closed a little higher, but still it does have a pretty good shadow. But regardless, it'll be easy to play if you want to take a long-term S&P play long on the entire market. If indeed we do perk up in April, well, it's pretty obvious. You just want to put on a long position above the top of this hammer. You got a high at 1359.68. Mark it off on your charts. That should spark some movement. Again, 1359.68 on behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania. And of course, as always, from all the people in Chicago, Illinois at the one and only Think or Swim, I wish you good trading and good night.